Chapter 11 Momentum Strategy. This chapter contains a momentum strategy using price action for entry. It uses elements of trend following to identify a trading direction and candlestick analysis to find suitable trading signals. It also uses a simple exit signal to get out of potential losing trades early. The strategy was tested with 28 different currency pairs using the 8 most traded currencies. Test period was 4 years 9 months for 21 pairs and 4 years 1 month for the remainder 7 pairs. This was down to the limitation of history on the testing platform. Results are annualized to make sure that the difference in length of the backtest do not distort the results. I applied a commission of $7 per 100,000 units, which is one standard lot. This is the typical amount of commission for an ECN account. Next is the spreads. Typically, the spreads are very tight on ECN accounts. However, I applied the double size of the average spread that Pepperstone was offering on their ECN account. For example, the average spread for EUR/USD was 0.4 pip, so I used 0.8 pip in backtesting. I did this intentionally to make sure that the strategy is going to be trading under the worst possible conditions. The strategy traded on every single trading day regardless of what was happening. The only exception was the Euro-Swiss franc, where it was turned off after the Swiss National Bank decided to support Euro-CHF at 1.2. You can find a full report of the backtesting in the attached PDF document or in the forum post. I believe that with more application of price action, the strategy could perform much better. I simply don't have the time to pursue this idea. I am sharing it with you so you can try out and make it into your own strategy. As you will find out, the strategy in its current state gives a negative expectancy. It is not aware of support and resistance level, and therefore have taken buy trades below resistance and sell trades above support. I believe that taking support and resistance into consideration could make it much better. You are free to take it apart and apply whatever tools you think would make it better. There is no obligation for you to share your version with me or anyone else. Whatever you create becomes your very own. I encourage you to apply the tools and knowledge made available in this course to experiment with the strategy. I'm going to briefly describe the core idea behind the strategy, then I will present to you the complete strategy and examples. Let's get into it. This is the process of determining which direction is more favorable to trade, buy or sell. Here, I borrow the idea of using simple moving averages from trend following. You might have heard about moving average crossover strategies where the position of the moving average generates either a buy or sell signal. However, in this strategy, the moving average will only determine the direction that I want to trade and not the actual entry and exit itself. Here's how it works. I use two simple moving averages consisting of a 20 period and an 80 period. The 20 period will represent the short term and the 80 will present the long term. If the 20 simple moving average is above the 80 simple moving average, this tells me that recent price movement has been higher than its long-term average. This could be a sign that price is trending up. Therefore, it favors long trades. Conversely, if the 20 simple moving average is below the 80 simple moving average, I would only look for shorting opportunities because this could mean that price is trending down. This is how the direction filter works. I use simple price action analysis on candlesticks to find entry. Since this is a momentum strategy, I need to see evidence of price pushing in the same direction as the filter before I want to enter a trade. For this, I define a strong move up as 2 consecutive bullish candles, each closing above the 20 simple moving average, and the second candle has higher high, higher low, and higher close compared to the first candle. Similarly, A strong down move is 2 consecutive bearish candles, each closing below the 20 simple moving average, and the second candle has lower high, lower low, and lower close when compared against the first candle. Now that I have identified a possible sign from price action that momentum could be strong, I will enter the trade with a stop order. I want more evidence to back up my case for a trade, and this is achieved by waiting for price to break the high or low of the second signal candle by a significant amount. My stop will be placed on the higher low of the first candle. I have chosen to use a 20 pips break as the trigger to enter the trade. For stop loss, I use a 10 pip distance from the high or low of the first candle. These are just random numbers that I chose, and it is not critical to the strategy in any way. You can experiment with your own numbers. Here is an example of a long setup. In this picture, the red line is the 20 simple moving average, and the yellow line is the 80 simple moving average. Since the red line got above the yellow line, I started looking for signals of upward momentum. A few candle passes and I saw 2 consecutive bullish candles, both close above the red line. The second candle has a higher high, higher low, and higher close when compared to the first candle. So this is a potential buy opportunity. Next, I place a buy stop order at 20 pips above the high of the second bullish candle. My stop is 10 pips below the low of the first bullish candle. One important element of momentum is time. A move with strong momentum will tend to not hang around too long. On the other hand, a move with weak momentum will take longer to unfold or even not at all. So, I use a time limit on the stop order to filter out weak momentum. I set the order to expire within 2 candles if not filled. This ensures that I would only enter trades where my trigger is met within 2 candles. If it takes longer than 2 candles, then I am not interested in it anymore. I use a single target of 4 times reward to risk during backtesting. Since the strategy makes use of an exit signal, I was not so interested in testing targets of different size. This is an option for you to try out. You can also set targets at support and resistance levels. That is something that I definitely would recommend trying. In Chapter 10, I introduce you to the process of finding an early exit signal. For this strategy, the most effective exit signal was found using a random sample of 250 trades in the backtest. The exit signal is as follows. For long trades, exit the trade when a candle closes below the 20 simple moving average. For short trades, exit the trade when a candle closes above the 20 simple moving average. There is a simple logic to explain why this exit signal works. Remember that one of the criteria for a long trade was that we must have 2 consecutive bullish candles that closes above the 20 simple moving average. Therefore, a candle which closes below the 20 simple moving average will invalidate this criteria. The same explanation goes for short trades. Here is an example of a long trade which was closed out because the exit signal was triggered before prices hit its target. As I have said, this strategy makes use of very basic price action, so there is a lot of room for improvement. One idea that I would highly recommend you to try out is to make use of support and resistance level when it comes to placing stop loss and targets. This was not possible for me to backtest because there is no automatic process to identify support and resistance. As you can read from the backtesting results, this strategy is not profitable after trading commissions and spreads over the 28 pairs. However, its expectancy over the Japanese yen pairs are positive. This could mean that perhaps this strategy identifies price action for Japanese yen pairs better than the rest. If you wish to try out this strategy, then it is more advantageous to use a standard account with no trading commissions. The backtesting shows that the average impact of commission per trade is a lot higher than the impact of high spreads. So there you have it. This is my incomplete momentum strategy using basic candlestick analysis. The strategy is now yours to own and to modify as you wish. If you want to collaborate with other members, please feel free to discuss this strategy, including trades, in the Momentum Strategy Trade Forum.